Hi, I'm Colleen Kruger. I'm a music industry professional with over 10 years experience in production, management, and music curation. As an independent contractor through my career, I've noticed a knowledge gap in navigating available health and wealth options. With so many options available, it can feel overwhelming and not knowing where to start. Unlike corporate culture, where support's ingrained and much of that process is taken care of internally, contract workers are often left on their own figuring things out. So, in collaboration with Elephant Artist Relief, I'm excited to be hosting a short series of talks. I'm going to invite professionals from insurance, tax, financial planning. We're also going to explore some health resources and coaching practices. And through these talks, I'm going to aim to address some key questions. So, who should I talk to first? What types of support are available? Where can I find the support? When should I be looking into support? And how can I afford support? The goal is to empower arts and arts workers such as yourself to succeed and thrive today and into the future. Art and artists are essential to our community's vibrancy. So, taking care of these sort of core essential needs, health and wealth is essential for future art. You can find out more about EAR at elephantartistrelief.com. And before we start our talk, in spirit of truth and reconciliation, we at EAR and our members acknowledge the lands we meet, live, work, gather, and play on. These lands are the traditional territories of the Blackfoot Nation, which includes Siksika, Piikani, and Kainai. And we acknowledge the Tsuut'ina and Stoney Nakoda First Nations, the Métis Nation Region 3, and all the people who make their home in the Treaty 7 region. We hope you enjoy the talks and we'll see you soon. Thanks. Hello, and welcome to our good old tax talk and little outline of independent artists meets our lovely annual filing needs.
Sure.
We're inviting Ian to talk about taxes. He is an artist and going through the rigmarole, is that a word?
Rigmarole. Oh yeah.
I'm a chartered accountant.
Yeah.
So he's a great person to give some insight to the artist's life as an independent contractor and how we need to set ourselves up for tax time. Hi, Ian.
Hi, Colleen. Yeah, that's me in a nutshell. So, hey, everybody. I trust that some people who might view this, I'm already lucky enough to know it's not always a huge community. So, hey, Calgary people and Alberta people, this will be pretty specifically for you guys. Lots of this will apply to anybody in Canada, but this is for you. So, yeah, I'm Ian St. Arnaud. I am now an accountant, which is a crazy thing. The 10-second story on that was I've been a musician for, geez, about a decade now and was taking a science degree. Then COVID hit and music died. That died. And yeah, I switched to accounting. Somebody kind of put a light bulb over my head and said, "You dummy, musicians need accountants too." And I was like, okay, not so bad. My dad's an accountant, so I kind of just went to work for him and showed me the ropes. And I realized, oh, this is a necessary evil in the world. So I'm here to be that evil.
Nice.
No, I'm actually not the evil. I'm not the tax man. The CRA is the tax man. I'm your friend. I'm here to be your helper. So what I want to talk to you about today, and I might pop up this slideshow right away here, is yeah, taxes for artists. Now this is for anybody in the creative world. You don't have to be a musical artist. You could be a theater person. You could be designing pot holders for Etsy, whatever, right? You could be somebody who manages artists, a small independent label. Really, if you're self-employed, um, this applies to you. So I'm going to start the slideshow if that's cool with you, Colleen.
Please.
And so I'm going to go share screen, and I'm going to see if I can figure this out, which I'm really bad at doing. So give me 1 second. You have any basic tax questions for me while I'm trying to figure
Oh
out how to
gosh, as
share
tax
my
tax
screen?
is pretty basic.
Tax is super basic. It's actually really
Actually,
like,
when you have your system set up, it's a lot easier than when you don't have a system in place and it's very daunting and like not really knowing where all the things exist and how to organize it can feel really overwhelming, especially if you're not doing it at like throughout the year as projects or as your work is progressing. And then at
Right.
the end of the year, you're like looking back and being like, oh no, I have to.
Well, you're in luck. We're going to cover that. Can you see my screen?
Yes, it's
Yeah, you can. Okay, cool. I've never actually had to do the screen sharing thing because I'm always like listening to these talks rather than giving them.
nice.
So hey, Music Calgary Taxes for Artists. I'm Ian St. Arnaud. This is Colleen Kruger. Today is February 24th. I put the date on there specifically because some things in here do change year over year. So important to know this stuff is in here for right now. Okay, so Colleen gave me a list of things we should probably talk about. Slides are gonna go through that. So business structure. You're an artist. It's not a business. Sorry, man, it is a business. You are self-employed. That is called being a sole proprietor. That's different than being a corporation. And that's kind of all you really need to know. Like basic points, you're either a sole proprietor or you're a corporation. You are the business. So this means that with your regular personal tax return, taxes are real, you have to file those. There is an extra little form that you need to put in there called the T2125. I'll say that a few times. If you're listening to this, write that down, give it a Google. It will save your life one day. T2125. Yeah, so that's a special form that says, hey, I'm self-employed. There's no cost to starting being a sole proprietor, to being self-employed. You're probably doing it already if you knew to find this chat here today. The other thing you can be is a corporation. And that's where you create. So you are a human, you are a business. This is where you are creating something that is so entirely separate from yourself. It's an entire other entity. And then that thing needs to file taxes. So it has nothing to do with you being self-employed. People will do this with their music business, or maybe Colleen's done it. I know Colleen does lots of things in the music industry. Maybe one of Colleen's other businesses have gotten to the point where they want to incorporate. There's benefits to that. You could take out a loan, for example, and then Colleen herself isn't on the hook for that. The corporation is on the hook for that. There are tax benefits. You pay less taxes if you're a corporation. So that's all stuff we'll get to. But the big thing is you are probably a sole proprietor. Registering a business. So, okay, you're a sole proprietor. We figured that out. If you're making under $30,000 in a year, which we define as 4 calendar quarters. So it doesn't have to be like January to December. It could be March to March or June to June. If you're making under $30,000 from your business, you don't have to do anything. You have to report it on your taxes, but you don't need to register to anybody. You just have to put it on that T2125 form. Say, hey, I'm Colleen Kruger. I played some cafe shows this year. Here's what I made in income. Here's what I paid in expenses. But you don't need a GST number. You don't need a business number. You don't need to tell any government entity that you're starting to do business. If you want to incorporate, which I mentioned earlier, that's when you have to go and register for that. If we want to talk more about that, I'll let Colleen stop me now or later and discuss that. One thing I really want to focus on this for just a sec, partnerships. So many people come to me and they're like, well, I've got a partnership. It's kind of not real. It's more of a legal thing than it's a tax or accounting thing. You're like, well, I'm not a sole proprietor. I'm a partnership. A partnership is probably usually, let's say the most common example is going to be a band, right? Let's say there's a band with 3 people and they're in a 3-way partnership. They're each just a sole proprietor. That's all the government cares about. You're each a sole proprietor. There's a little section on here that says, hey, are there any other people who run this business with you? And you go, yeah. Ian and Colleen run this business together. They're a partnership. and they each take 50% of that money. So it means we're each going to report the income and expenses from the business, and I'll put a 50% at the top and it'll cut everything in half. We both need to individually do that. That's where it's important that we communicate.
Right.
So if you report your taxes one year, say we're a partnership, and then I don't report it, that's when there's going to be problems. But a partnership is a legal thing. Like you can get a lawyer to create a document for you that is binding, that says, hey, we will split the money and we will split the expenses. But the CRA doesn't care about that. They just want to know who made money, who paid expenses. There's no real tax thing as a partnership until you're like a corporation making millions of dollars. My little footnote. Colleen, am I rambling? Anything
No,
at
I
this
think
point?
I think that's, well, step one. How do you structure yourself and like what level do you need to do different things? So you've covered that.
Mhm.
But for a lot of bands, I think it's, or people that work in a collective unit, I think the incorporation versus partnership is tough to know when to do a certain step.
Mhm.
And then when you've worked so long in a certain way, it can be really hard to like sort of backpedal.
Right.
You know what I mean? So like incorporating, does it make sense to incorporate really early on in a project if you have several parties involved, or is it
That's a really good question.
to like work towards and do when things are really moving, but then maybe the agreement is harder to come to?
I'd say in 95% of cases, I'm going to assume we're talking to bands right now,
Yeah.
just for the sake of argument. Incorporation is something you work towards. And once you really have something that's running and functional, it's a conversation. It's a higher level. It's a higher level of really responsibility,
Mhm.
and there are higher costs associated with it. But offsetting that, you get more benefits. So
Right.
if you're like, hey, we're going to start a music management company or a band, be a sole proprietor. Just get your feet wet. You don't have to go to a lawyer. You don't have to worry about like shareholder agreements, issuing yourself shares,
Mhm.
corporate tax, a separate tax return. Like it can be a really great thing, but um, I want to be talking to who I think are the vast majority of people out there who will find this, and I don't think incorporation is going to be right for you right
Right.
now.
Totally.
Now the partnership, maybe I made it a little bit confusing. Um, you're a sole proprietor, everybody out there. You're probably a sole proprietor. If you want to have an agreement with other people you work on that business with, it's a really great idea, really, really good idea to
Mhm.
get something in writing. You're songwriters, and you land a McDonald's commercial, here's $50,000. It's going to be pretty important to have something in writing saying how that money flows out. If somebody sues you, you've ripped off a line from a song, who's sharing that expense? That's really important, but it's not an accounting problem so far as the CRA is concerned. That's
Right.
an agreement. That's separate from your tax return. Your tax return, if you're a partnership, you're each just a sole proprietor, but you're writing on each other's forms. They are my partner. They are my partner. We take 50%. We take 50%. Does
Gotcha.
that make sense?
Yeah. And
Make
then
sense?
four, so this would be like a question for people that are having like the side art project, which is the sole proprietor project, but may also have a 9 to 5.
Mhm.
So if you have a 9 to 5 and you're making income on the side through your band or whatever, does
Yeah.
that just increase your tax rate? And like at what point, like someone in the band is going to take a hit if you're a partnership and maybe carry a 9 to 5 plus making a side income. So,
Yeah, that's a good question. So again, I think we're probably talking to the majority of people out there when we say you have a job outside of your music business, your self-employment. And probably the majority of people in Canada who are self-employed I don't know, maybe probably majority, it's not their only source of income. So I just want to clarify what you just asked me was if, let's say, two people are in a band,
Hmm.
one of them works 9 to 5 and the other doesn't,
Hmm.
how do they split that income and split those expenses?
Yeah. Is a smart partnership way to like one
Yeah, no,
take it?
it's a really good call because there would be a tax benefit to, let's say this person makes more money than this one. They work another job, whatever. They make more money than this person. Um, they are going to be taxed higher probably than this person. So they're going to want to use more of the expenses from the band
Mm.
to lower that. Now that's it gets a little gray there
Yeah.
because if your agreement on paper is, hey man, we agreed to share the expenses and therefore get the credits for those expenses
Mm.
50-50, well, then yeah, you're cheating them out of credits. You're cheating the person with the lower income out of credits.
Mm.
But you'd hope, and this is where being in a partnership comes in. It's not always to the letter of law. You could go, hey, maybe hopefully you guys have the same accountant, and they go, well, it looks like they would benefit a lot more from these credits.
Mm.
Perhaps we could report that they paid more of these credits. It gets a little gray, like what's legally correct and what's not, which brings us to this next slide. If I didn't answer that,
No,
let's
I think
circle back.
it's helpful to even just have like a semblance of a vision of what that can look like. Because yeah,
Yeah,
it can be gray area, but it's also like it's navigating having multiple things and being creative in the creative world.
yeah,
You just have so many things to juggle. And then when you have partnerships in terms of a collective or a band, there's lots of little things to think about in terms of how you're tracking and who's filing what and how that looks like. And
yeah.
and it's good conversation to have because at the end of the day, it's like everyone wants to benefit and not necessarily take hits on being creative or like being in a creative outlet as like a side hustle or whatever it is.
Yeah,
But
and it's just it can get so granular. Like
mhm,
you can fight over, you can fight or you could debate, or we could, I could spend, let's say I'm your accountant, I could spend an hour talking between you and your partner, trying to decide who's going to claim $100 here or there, but it's going to be a $5 credit. Like
right.
there's there's judgment calls to be made.
Mhm.
There's knowing your way around the system, and then there's your time. Like you don't want no person, anybody, especially not in music world, wants to be spending all their time doing this. And that's at the very end of the slideshow. I want to just tell you about why working with somebody like me or working with somebody else, it's like having a manager. They're there to help take things off your plate. Like they're going to provide value to you and they're going to educate you along the way, but they're also going to take some of that work burden off.
Mhm.
So that's a whole other thing. But I want to get back to this.
Sure.
So I called this one reporting income, but the big question I want to ask you, everybody, is your music business a hobby or a job? And I think that's one of the most insulting questions,
Mm.
really. And I don't think I hate that question because if somebody were to be like, oh, well, it's a hobby, like, dude, like leave me alone. Like we work hard at this. We don't always make a lot of money, but we work hard at this. This is a real career. Um, but where you need to swallow that pride is reporting this stuff. Now, the ultimate correct thing to do is report any income you make all year on your tax return. That means I sold $100 guitar on Kijiji. I need to report that income. Okay, all right. Is everybody doing that? Is that the right thing to do? Does the CRA care about that $100 guitar?
Mhm.
You went and you played a rockin' for dollars. You won $20 on the wheel after spitting a beer in somebody's face. Am I supposed to report $20 cash? I don't know, man. Whose time is that worth?
Mm.
So that's the question you need to ask yourself. Um, so do you report that $100 on guitar? When does music go from a hobby to a business?
Mhm.
That's up to you. It's going to cost you more time to do the bookkeeping for your business. In my opinion, smart play is to pay somebody like me, like an accountant, to file that for you and make sure it all looks correct and the edges are squared off, to get the most of your benefits and to make sure nothing looks super funky to the CRA. Um, you weigh those. Are you going to get more benefit out of reporting it or not?
Mm.
Are you trying to qualify for a loan or a mortgage? What are your goals? If it's just to reduce your tax burden, cool. I think you should take an hour and go through your own books and figure this out. If you lose 10 grand year over year over year in your music business,
Mhm.
which is probably the reality for some people, the CRA is not going to really like that. They're going to go, this isn't a good business. This is probably a hobby you're spending money on.
Right. Yes.
It gets confusing. So talk to somebody, talk to me, send me an email. Is this a hobby or a
So like
business?
in any sole proprietor business, if 100% of the expenses are not met with some income stream, so say you're an artist, a visual artist, a musician,
Sure.
and creator, anybody, so that you're creating something and you're spending money on it, but you're not making any money. That's like a weird thing for the CRA year after year to just see expenses and no level of income that's growing in any direction?
Kind of. Ideally, you get to talk on the phone to somebody at the CRA and go, well, listen, I'm working for 3 years, I'm grant funded, and then in year four, I get probably up to $100,000 payout. You don't get that chance to defend yourself. You get numbers on a screen, and if they come calling, it's usually bad news. Like they come calling to go, um, what's this? You said you spent 10 grand on a marketing campaign. I need all the invoices and receipts for that. Like, it's
Mhm.
not a personable thing. Um, so the numbers have to tell the story.
Yeah. I have a
So
question
that's
regarding
judgment has to be exercised there. Sorry, go ahead.
so in grants, like I've read in the past that up to 3,000 is not taxable and anything after 3,000 is taxable in a bursary grant, or that you claim 100% of a grant with no portion of that being like a bursary amount.
You know what? That's a good question. You have found a gap in my knowledge for sure. So I haven't dealt with that. I'll say that I'll get back to you. I'll have to look at that.
Yeah, I'll write it in
And
the description.
yeah, honestly,
Mhm.
um, so my experience with grants is kind of what I put down here. Um, I'll say I've worked with people who've received grants in the 5 grand to 50 grand range. Um, the 3 grand threshold you're saying puts up a little flag in my brain, about the Canada's worker benefit, which is something I'll talk about later. But I wonder if wires might be crossed on that. But anyway, I don't know. Grants are an issue. Grants, general rule, maybe with that exception you're talking about, below a certain amount, grants are taxable income.
Mhm.
It's kind of a huge middle finger. Like they're giving you money that you have to spend on something.
Mhm.
Like everybody out there, you know that, or you should know that. If you're getting a grant, it's money that's already spent. Like you're not asking for it to keep it or invest it or anything like that. But the CRA sucks at that. They don't understand that for you to even be getting a grant in the first place, that needs to be money that's spent.
Mm.
Um, the great thing about all these grant bodies, municipal, provincial, federal, look those up, know them, they're your friends, is they make you report on the grants. And I know everybody's like, oh, I spent that money a year ago. I don't want to report. Oh my God, they are doing you the greatest service. Not only are they making sure you're not stealing the money,
Mhm.
um, they are making you do the work that you'll have to do for the government anyway. You have to keep good records of what you spent that grant money on. I have an artist I work with who got a juried sound recording grant got about $45,000. Didn't keep amazing records on it. And now the CRA is asking us to provide receipts for $45,000. It's very difficult to go back and do that when that was 2, 3 years ago.
Yeah.
And if you can't provide that, they're going to say, you got that money and didn't pay taxes on it. Give us $5,000.
Hmm. I
That
actually have a
sucks.
good example because earlier in my career, I was getting like grants in terms of my business.
Mhm.
And one year, this is what scared me around taxes and probably why I've delved into it a bit more, a lot more in terms of management and like bookkeeping and finances. But I was audited, and it was because a grant flagged it, and my expenses and grant money were equal.
Yeah.
Essentially, they cancel each other out. But that was a
Mhm.
red flag, and they audited me and requested all of the documentations. And
Hmm.
luckily I had it, and it wasn't that overwhelming because I was like, I have my folders, like I can literally pull out all of my expenses because I reported every penny.
Because you had to for the grant body, right?
Yeah, so it is helpful, and it's really worth just having a Google folder and not necessarily being tedious about it up front, but just throwing every single receipt you have into a folder, and then at least down the line, if you have to go back and look at different expenses, they're
Hmm.
somewhere in that folder, you know, and it's
Yeah,
like they're at least somewhat organized or at least somewhat findable, which is really hard to go back. And it's very daunting and sort of scary. So I think the better your record keep.
definitely. Hey, I've got one more little nugget on that topic. Okay, so let's say you got a grant,
Mhm.
and part of that grant is for what they call artist subsistence. So part of that grant, man, this would be so nice. I've never gotten one of these, where the grant allows you to pay your rent or your groceries. Okay, fast forward 2 years into the future, you haven't paid your taxes. How are you going to prove that you spent that money on rent? Oh my God, what a problem. You need to do something. If you're being given money
Mhm.
to spend on your rent or your groceries, like find a way to make something provable. I don't know if it means talk to your landlord. I don't know. I
With
haven't
the
found a solution to that yet.
report
But
itself, like when you're
yeah,
reporting, when you do your updated final budget and you submit that, would that not be enough of a record to be like, look, I claim this on the final report and it was approved?
that's what's so frustrating to me is that Factor,
Mhm.
Foundation Assisting Canadian Talent on Recordings. Just for those of you who don't know that one, that's where some of the biggest grants come from. Factor.
For
You
me,
have to submit a report. Sorry,
it's
for music. No, the CRA will not accept a spreadsheet that you've given to Factor.
hmm,
Even a Factor might accept it, CRA is not going to accept it. CRA is going to want something stickier like um, a bank statement or an invoice and a receipt. Like it's tough to know exactly what they'll um, accept,
mhm.
but the more detail, the better.
Yeah, all right.
So grants can suck to get because you need
Yeah.
to keep good record of where that money goes. And
Canadians, our art scene relies so heavily on them. But yeah, tracking and every little penny.
it's so worth figuring out though. Just do
It's
it. Just
wild. I do
yeah.
have like there's a lot of grant funding, but the closer you are to federal funding, the less they actually request in terms of documentation on the final report. And
Mhm.
that can get scary for artists because there's little requirement for the report, but they can also audit at any point. So you should be keeping your records. But because there's no requirement in that reporting, I think people can get a little lax on their.
And that's what's happened with me and a client or two. And then, we haven't filed since 2019 when they got the money, and now that's 5 years ago.
I know it
Like
happens fast.
it happens
That
fast. So
happens
it's
fast.
a little bit of work as you go, and I promise it's going to save you thousands of dollars. Like,
Mhm.
um, anyway, I never wanted to be this guy. Now I'm this guy.
That's
Keep
okay.
your
I never
records,
wanted to be this
guys.
person either, but I think
Uh,
like, through experience and like through having scary experiences where they do come at you and you're like, yeah. And then it,
Yeah.
you get sort of like shocked into like not doing something for a period, and then it's like overwhelming. But the longer you leave something, the more big and overwhelming it becomes. So like it's
Yeah,
just putting your
true.
head down, making this like making a system that's like
Or getting help. That's like
habitual. Yeah, or
getting help.
if you don't enjoy it at all, get a bookkeeper, get an accountant. It's worth the money.
And we'll talk about both of those because they're different. They're
Okay,
different things.
okay.
Okay, we need to keep going. I know we could talk forever, but I gotta make sure we hit some of these points too.
You get it.
Um, so we talked about revenue,
Hmm.
income, and now expenses. So in a nutshell, your revenue, anything you made from your, say, music business, whatever, that's all your income. Cool. You get that part. Now your expenses. This is where it gets fun, actually, because this is where you can save a lot of money. So the big headline is anything that helped you earn income for your business. So I am in my little home studio. It's 150 square feet. My apartment's 1,000 square feet. It's 15%. It's 15% of my rent. It's 15% of my utilities. See where I'm going, right? Like this is a space I use to work. That work helps me earn income. I get to write off 15% of my rent. Um, so that's the first point there. We're up and down the QE2 all the time. You could track your gas. If you don't want to keep all those gas receipts, there's an easier way. Um, there is a mileage rate. You can only use one of these two things, gas and oil change expenses. You can keep all those receipts, or every year the CRA comes out with a kilometer rate. So say 60 cents per kilometer. And you'll say, oh, I drove 2,500 kilometers. That's 1,700 bucks or whatever. So anyway, auto expenses. That's something for your business. Um, Repairs and maintenance. So I got to get a setup on my guitar, buy some strings, fix my amp. That's all cool. Fix your computer. I don't know. Office supplies. This can be a little more broad. It's supposed to just be like printers, papers, pens, but people will put their Spotify subscription in there, their Microsoft Office subscription. That's a good one. Your Google Drive storage, stuff like that. Generally, if it's on the computer, that seems to apply. Stage clothing and makeup, that's a fun one. So I'm wearing my Wares shirt right now, great Canadian Edmonton band. I think they actually said they're stopped playing for now, though. Um, I wear this on stage. I
Yeah.
also wear it on a Saturday afternoon. I can write off the cost of this. If your clothing is the same as your day-to-day clothing, or you have a special, Ace from Kiss crazy sort of setup, those are things you spent money on to do your job. Don't go crazy. Be reasonable. If you spent 10 grand on clothing and you only made 2 grand on your music business, you're going to get audited.
Hmm.
But this is a brief list of things.
Unless you're
Capital,
a clothing
sorry.
designer and a musician and you have multi creative facets with that number,
Yeah,
it gets
it can get more complicated. But this the point of this is just start thinking about all the little ways you spend money to
hmm.
help do your job. And musicians, man, you'll get paid $100 to be driving to Saskatchewan to, you got to eat 4 A&W meals. You got to pay for a hotel, A&W meals, hotel. You got to stop and buy a toothbrush, London drugs, like all that stuff.
Keep receipts.
Keep receipts. Keep receipts. Receipts are key.
Thing
That's my last point here. But capital assets, really quick. Capital assets are bigger purchases. This microphone, I don't know how much this cost. Let's say it costs $600. It didn't. $600. Sure, I could say I bought this and write $600 equipment expense, something. Or the better way to do it would be I probably don't need all of that $600 of expenses this year. I've got lots of expenses. With bigger things, capital assets, you can write them off in little chunks over time. So let's say I bought a car, $30,000. Great. I could pay no tax this year. because I'll get a big $30,000 credit. But I don't need it. I'm going to waste some of that tax credit space. You know what I mean? Instead, it'd be better for me to be able to write off a little bit of it every year.
Hmm.
That's capital cost allowance. So capital assets, bigger instrument purchases, gear, computers, generally over $500 is a good ballpark for when you want to consider something an asset versus an expense. And then to your point, Colleen, receipts and stuff. Yeah, those are important. Your accountant, like me, I don't really need to see all your receipts. I can take your word for it. But at the end of the day, you are on the hook to provide proof to the government.
Mm-hmm.
So if they ask about your $5,000 in gas, you have to be able to back that up. So yeah, receipts are good. You need to keep proof of expenses for up to 7 years, I believe. That's how long they can come and ask you for them. It's a long time. Digital is good. Lots of good bookkeeping apps that are free or cheap where you can just take a photo of receipts. My dad's an accountant. I always remember as a kid, his wallet was about that thick with receipts, not cash. So that was cool. Yeah, so those are
So,
important.
like the paperwork, you don't have to hold on to the physical copy if you take a photo and digitize it. Because I know there was like a couple years there where they're like, you must keep your physical as well.
Yeah, but it's just not practical. Like, um, that might still technically be the rule, but I haven't had anybody rejected on that premise.
Right. Okay.
How about if you buy a car and you spend $30,000 on it, keep that paper around, like
Yeah.
keep keep that paper around. That's going to be pretty handy to have. But somebody said to me, with the CRA, you cannot exercise common sense.
Right.
So always best to be a little more conservative with stuff like keeping receipts.
Okay. Is it so for mileage? How do you prove mileage if you're not using a receipt?
That's a good point. So gas receipts are a good way to do it. Um, for mileage, they will accept, it's kind of weird. Like I could just draw this up, but they will accept like a log of mileage. So I could be like, today, February 24th, drove 300 kilometers. February 22nd, drove 200 kilometers and like sign it off. Like
Okay. But
I've
there's apps
seen them accept that,
that help.
but there are better ways to do it. Like I believe QuickBooks, um, which is a great bookkeeping software. You can get an app, and I believe you can basically tell it to track your location, whether or not you love that. You can then go back and go, oh, this trip to Regina, that was a business expense, and it'll go, great, you drove 1,200 kilometers. We'll just chalk that up.
Right.
So I haven't had too many times the CRA comes and asks for mileage logs, whereas they will more often ask for the gas receipts.
Okay. Good to keep in
Yeah.
mind your folks.
Yeah. The mileage rate calculator, also just way easier.
But
Take the 70 cents per kilometer. It's easier.
yeah. If you rent a car, you can't claim the mileage. You would rent the rental expense itself would be
Yes. Yeah. You have to own the vehicle to
yeah.
claim the mileage.
So if you
That's
rent
good.
a
That's
car,
a good
then
point.
your
Yeah.
gas receipts at that point because then you
Yeah, that's right. Because, well, yeah, I believe to claim, man, you're splitting hairs on me here. I think it's probably easier. Let's see, how long are you renting a car for? I'm going on a tour in a couple months and we're renting a van for 3 weeks.
Mhm.
I'm just going to keep the receipts. It's 3 weeks of receipts. It's not, you know, I don't know. I'm sure either would work. But
Okay.
a flag in my brain is saying you need to own the vehicle to
To
get that kind of
claim the
special
mileage side.
treatment. Yeah.
Okay.
Um, home office expense. I touched on this. Colin, you wanted to make sure I touched on this too.
Hmm.
Um, T2125 form. your self-employment form. There's a section of it at the bottom that basically asks you about home office specifically. Um, your rent, your utilities, your mortgage interest, if you own a home, just the interest portion. I don't know why. Based on the proportion of your home. Sorry, were you gonna say something?
No,
Okay. I heard it's, and I was
I'm
like,
sniffling. Sorry.
I cut her off. Yeah, so I do know people who live in a 500 square foot apartment, and the entire thing, it's a little single bed and it's XLR cables and easels, and you know what I mean? We've seen those people whose living space is totally consumed by their work and life. You're asking for a red flag. If you go 80% of my home expenses are my home office expense. It might be the truth,
Yeah.
but weigh that against having to prove that all the time.
Oh, I have a question regarding home office. If you
Yeah.
have office space or an art space that you also use externally of your home, plus you use a portion of your home, what does that look like?
You have to be careful about that. You got to watch out for double dipping for sure. So you have to make sure for the home portion that you are using that specific section.
Right.
And I would try to just delineate these as much as possible. So on your kind of where most of the expenses are reported, it's just a big list, right? Go repairs and maintenance, office, rent. Now you can type in rent there and it'll pop up and it'll go, yeah, okay. Like they assume you're renting a workspace. That's not where you enter your home rent. That goes down below. It's a separate section. So you got to be really careful that your home rent expense that you want to write off goes down here in the
Okay.
home office spot. Versus if you rent a place to work, it goes up here with all your other stuff, your office.
Got you.
Sorry.
Yeah, office
It goes separately. It's got to be very carefully
more
separated.
general expenses versus
Exactly. And when in doubt, pick the bigger of the two and go with that.
right.
Because if you're doing this on your own and you're not working with an accountant or are not very comfortable with this,
Mhm.
don't try to be too aggressive.
Right.
You're going to cause some problems. If you're working with somebody like an accountant or you are very comfortable with doing this over time, that's where you can kind of take more chances. We call it being more aggressive. And you're not breaking any rules. You're
Mhm.
just kind of weighing how hard the CRA cares, how hard they're going to look at you, how prepared you are, and playing within the legal gray areas.
Totally.
Which I always thought, I remember growing up, my dad was an accountant, and he would be like, oh, well, you know, these people, we save them this much tax money. And I was always like, that's gross. Like, people earn money, they should pay taxes. I believe that. We should pay taxes, but the, these rules are there to help you. They were
Yeah.
put there to help you. You
And we're
should just know how they
artists.
work.
We work
We're artists.
we work within the line of chaos at all times.
Yeah. So it's just another
It's another
area to
chaos line.
navigate.
It's
So
fine.
anyway, GST
I appreciate your
and tax. I just think there's just it's just another world you gotta know or
yeah,
that exists. You
totally.
gotta know it exists.
You got to play by the rules and play the game. And
Yeah,
within the rules that they give us to play, it's fine, you know.
exactly. GST and income tax, I'll breeze through this one. GST, I mentioned earlier, $30,000 magic number. If you're below it, don't worry. If you're above it, you have to sign up for a GST number. That is a whole other thing than your personal taxes. It's not hard to do, but you need to do it. Um, you get an actual business number. That's when you're like, hey, government, I exist.
Wait, may I ask you a GST number? If you have a 9 to 5 plus your sole proprietor on the side, does the sole proprietorship need to hit the 30,000 or are you there because of your 9 to 5?
Good question. It has to be self-employment income.
Yeah.
So your regular job, you can make $300,000 over there. I don't care.
Yeah.
As soon as you hit 30,000 on your self-employment, that's when you need GST. You don't need a GST for your regular income. And super quickly, how the GST works. So great, I've hit 30,000 the next year or the next period. Let's say I buy this little trolley, I spend $5 on it. So I spend 25 cents in GST. I get to keep that GST I spent on this. And then when I'm playing music and they give me $1,000, I need to ask them for extra money, GST. So I need to ask them for GST when I'm making money. And when I'm spending money, I'm paying GST. They balance out. That's all I'm trying to say. So at the end of the year, you either have to pay GST or you get a refund, depending on if you collected more from earning money or if you spent more on the GST from your expenses. That sounded really wordy. It's a big balancing act. That's all it is. It's a balancing act. You either collected more or you spent more. You have to keep track of it.
Right. So the more you spend, the potential
the better.
greater to get money
Yeah.
than to
the more expenses you paid that have GST on them, the better. That's good.
Yeah.
And you want to earn money, obviously, but you got to take GST, and that is bad for your GST.
Yeah. So like in the sole proprietor world, you always have a side account where when you get paid, you put that GST aside. And
Ideally, yeah. Ideally.
Monthly, quarterly, annually, whatever you decide.
But it's always, like you said about the corporations earlier, it's something you build up to.
Mm-hmm.
Nobody's expecting you to get up, do open stages for $100 with your $100 guitar and worry about all this.
Mm-hmm.
The $30,000, like, this is something you've probably worked your way up to. Hopefully, by the time you're making $30,000 from your small business, you understand how it works a little bit. And so this is an added layer of complexity, but it can help you. It doesn't have to hurt you.
Totally.
Quick swap over to the income tax side. I don't want to touch on this too much because this doesn't have so much to do with self-employment. It's everybody has to pay income tax. Where it does matter is if you are self-employed, your income tax isn't being taken off of a paycheck every 2 weeks. So if you work for a company, a big company, you'll look, okay, I made my hourly rate times 40, and then you'll see minus income tax, minus CPP, minus EI. They're taking that from you as a favor to you so that at the end of the year, you don't have to pay it all at once. You're always like, damn, they're taking my tax. Thank God they are, because you still had to pay it. If you're self-employed, you have to pay that yourself. It feeds into the bigger picture of your employment income and your self-employment income. You're not going to just get taxed on your music business or whatever. You're going to get taxed on everything together. So that's why I put the little brackets in here. You can watch this video, you can pause it. I'm not going to go through those. Yeah, there's a federal and a provincial rate. They add together. That's it. Boop.
Good time.
Yeah. EI and CPP. EI, again, want to breeze through these because they apply to everybody in Canada. It's not specific to us, but little bits are specific to us. EI is employment insurance if you're laid off. It's temporary income while you look for work. Yeah, I put $1,002.45 and 12 cents. So watch out for that. Basically, there's a little bit of money every year that you pay into these programs. If you work a 9-to-5 job, you'll see them taken off of your paycheck, probably. And for EI, you don't need to pay into that if you're self-employed. You can choose to if you want. The vast majority of self-employed people I've seen do not choose to pay into EI. And why? It's because it's an extra cost. And the people I've seen, maybe aren't making a ton of money.
Totally. And when you
Why are
actually
they paying into that?
this is an antidote about EI, but when you need it, if something happens in your life and you need to tap into EI, they prorate your payout based on your last 3 months of income.
See, there
So
you
as
go.
contractors and people that get paid loosely and randomly, it can be not helpful. And then you've paid money into it
Yeah.
and
And
even
I'm, yeah,
it. So,
I'm not saying EI is a bad idea. EI is a great and wonderful
or
idea,
an
but it
emergency.
might not for an emergency, and it might not be the best play for your small music business.
Yeah.
It's an extra cost. It's up to you. It's a little more work to sign up for too. You're not automatically signed up. Over to CPP. You can't avoid this. Everybody in Canada pays into this. I don't know what Alberta is doing. We won't even talk about that. What a mess. But CPP, you have to do. There's two parts. Your employer pays half of it and you pay half of it. Those go in. Kind of nice, actually. It's about 6% of your income goes into it. But if you're self-employed, you have to pay both parts of that. So rather than paying 6% on your own and your boss has to chip in 6, you got to pay 12.
Mm-hmm.
Kind of sucks.
Mm-hmm.
If all of the money you made in a year was from your self-employment, yeah, 12% of it's going to CPP.
Yeah.
Sorry.
Yeah.
Sorry, and you're welcome. Like it's a good thing. But on the flip side, if you have a 9 to 5 job and you're self-employed, you probably already there's a cap on how much CPP they can take from you in a year.
Mm-hmm.
You've probably already hit the maximum from your regular job. So you're probably not going to have to pay it on your self-employment also. Like I said, it's a bigger picture. Your self-employment is one part of your personal tax. So things you might have to worry about, probably don't have to worry about. I think we're near the end here, which is good. We're coming up on an hour. Benefits and credits. You know, things here aren't terribly different than anybody else doing their taxes. Again, like EI and CPP and whatever. Two things I want to touch on. Canada workers benefit. It's basically like the low income tax credit, which, hey guys, sorry to admit, some people in the arts aren't making a lot of money. But you do need to be making at least $3,000. You can't be like, I'm an artist, dude. Haven't made money in a couple of years. Like, you need to make $3,000, report that on your taxes, and be below those numbers on the screen federally. So if you are between $3,000 and $44,000, that's when you get a little bit of a tax credit. So that's not it's not like you get $1,500 of expenses. You actually get 1428 reduced tax. Or if you're a family, like a family without children, it could be you're married or you're common law or something, $2,400 split between you. Yeah, so it's a pretty minor tax, but you should know it exists.
Mm-hmm.
It's kind of nice. Self-employed benefits. It's kind of what we talked about earlier. The biggest benefits are that you get to write off all these things in your life that Joe Schmo does not get to do.
Mm-hmm.
There's a quick list of them again. And you can claim both the Canada's worker benefit and be self-employed. That is totally fine. But it's probably the biggest tax credit or benefit you get is the ability to write off all those expenses. I think that might be okay. I got one more.
Yeah.
Yeah. Okay. Any questions on that, Colleen?
No, I think that's nice. Also, like when you're using, say, TurboTax or anything like that, it usually prompts you.
Oh, I'm getting to that.
Okay, sweet.
Um,
On those credits, so
yeah,
feel too overwhelmed.
yeah. So TurboTax. Well, we'll talk about it. There's nothing wrong with it.
Yeah.
Tax planning, you might have heard this term. This is what I used to think was like a dirty term. It's not a dirty term. It's just navigating this system is really what that means. Um, help me help you. That's all. Make sure you're not missing out on stuff. So I put accountants in big bold here first because that's what I understand. And then I put secondarily the other people because you can hire 10 people to help run this part of your life. You can do it all on your own. It's up to you.
Mhm.
What an accountant does is help you navigate the legal gray areas, help you decide if you want to incorporate, which is a whole other world than anything else I've talked about here today, and with a whole bunch of benefits. If you're incorporated, how do you use that? Things like other benefits you can have, paying into registered retirement saving plans, a home buyer's plan, tax-free saving account, uh, accounting for investments. So it's tons of